Wednesday, May 19th, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how silver continues to flow out of Comex warehouses, and it shows that the silver squeeze movement is making a dent on supplies on Comex. I think many people still don't believe that can happen. Many people don't believe that small investors can make a difference to the wholesale market, but I think it's happening. So we're going to look at that today. Before we do that, though, I have a few things to announce. Yesterday, I did an interview, had a really nice chat with Lynette Zhang of ITM Trading. She was very generous with her time. She answered a lot of your questions. And yeah, I highly recommend you watch that. If you haven't yet, I posted it last night. So if you're in the UK and Europe, you might not have seen it. So yeah, it's the video previous to this one. And there's some other things out this morning in the UK. For example, the FT again being really not 100% truthful with things. And they're saying UK inflation more than doubles in April as energy prices rise. And they put like a picture here of someone filling their tank, right? As if to say that inflation is caused by energy prices. But we know that energy prices are rising because of inflation. It's not energy prices that cause the inflation, because we know, of course, that inflation is the increase of the money supply and also credit by the government and the central bank. But apart from that, though, in the UK, we've got two measures of prices. We've got the retail price index. It's called the RPI. That used to be the number the government used to use to index all their liabilities to taxpayers, like pensions, and also it was used for wages, for unions. They used to use that to index everything. And then we have the CPI, which was actually brought in by the Labour government. I think it was in the mid to late 90s. And the CPI basically underestimates price rises by about 1%, and it doesn't add rents, mortgages, council taxes, everything that's been going up in the last 12 to 14 months. So if we look at the data here today that came out, the other thing I would say, UK statistics used to come out at 9:30 London time. Now they come out at 7 before the market, just when the market is open or before anyone really in the markets is in the office. And why are they doing that? Well, I think it's because the powers that be, the Bank of England, maybe the Treasury, they're doing something, coming with the numbers really early so they can manipulate the foreign exchange market. That's the only reason I can think to change the time of publishing this data by 2.5 hours and bring it out when no one's really watching it. I find it really strange. So the CPI, which is what everyone looks at because it's the lowest measure, that was expected at 1.4. It came out at 1.5. That was year on year. But if you look at the RPI, the retail price index, that was expected at 2.4 and came out at 2.9. So I would say real prices in the real world are rising by almost 3%, not 1.5%. And even then, the RPI is probably doctored. So prices are rising in the UK, I would say, at least by 5%. So, and it's not energy that is causing inflation. It's just a consequence of the inflation. But the thing is, most people don't learn. and they'll buy into this rubbish from the FT. And why does the FT do that? Well, because the FT is a globalist institution. The FT is owned basically by the bankers, not directly, but it's the bankers, the hedge funds, the private equity people that really finance the FT. And it's not going to come out and talk about things that I do. But for you guys who have been listening to me, you know that things are much worse in the UK. So total sham, this CPI, RPI. And there's an article here from Money Week from 2011. It explains the difference between the CPI and RPI and why it matters. I'm going to put a link to it below in the description so you can have a read. It's by Maren Somerset Webb. She's a good writer, Maren Somerset Webb. Money Week is a good publication. I used to subscribe to it years ago. I don't anymore. Yeah. Now to the silver news. So we saw a tweet last night from John Adams of Adams Economics in Australia. One of the guys who's really been a main driver in this silver squeeze movement. He's really gone after the Perth Mint and others like Kitco. So he tweeted, breaking news, today's Comex Silver Depository Warehouses report was massive. Another 2.1 million troy ounces have left warehouses. From 2nd of February 2021 peak, 43.5 million troy ounces have left the Comex. We are winning the war against the silver cabal. Go apes. So there you go. Wall Street Silver. Yep. Join their Reddit group. Or also maybe subscribe to their YouTube channel, Wall Street Silver, as well. They're doing a good job, but all of us really are doing a good job by stacking as much as we can. I know some people can stack a lot more than others. It doesn't make any difference. You should just stack is like saving. I'm not here trying to force people to save their money. They should do what they can and the amount that they can. So why does this make a difference? Well, because by taking away the physical, the possibility even of having access to physical by Comex, not just silver but gold, makes what the bullion banks do, their paper game, more dangerous, because since last year, around March time, and the lockdowns and the disruption, the supply chain, there has been a lot of people demanding physical delivery from Comex. So if the physical isn't there or isn't readily available, it's going to make the Comex even more irrelevant. And yes, we look at the paper prices, which are basically set by Comex and the LBMA, but we should really be focusing on the real price in the real world. Eventually, Comex and the LBMA will be in irrelevance, I think, in setting prices, or they will have to let their paper fictitious prices really converge with real prices. So I think it's important. Yesterday, gold and silver actually didn't do badly, despite the fact that they didn't continue going higher, but they dropped very little. So it was a very tamped down correction. It wasn't really that much of a correction. I saw silver tested the 28 level yesterday afternoon London time, and it was there for a matter of seconds and it just came straight back up. This morning, though, we have come off a little bit, but it still looks pretty good. So with that, let's look at where the markets are. It's 8:23 a.m. London time. Yes, as I said, silver did break through 28, mainly because this overnight session is always very thin. So the bankers can do a bit more damage to the futures contract. So yeah, 27.88 was the low, but right now we're right back above 28, 28.08. It is down 10. only 1/3% though. Gold is holding well. We're at 1872, up $3. Range has been 1864 to 1874. Yes, I'm not getting excited about the paper prices. I don't get excited or annoyed at the movements of gold. Yes, of course, sometimes it does get frustrating. You need to be even-keeled, balanced. And I feel that there's a little bit of a wall of worry for people who are into gold and silver right now. They're saying, yes, it's doing well, but don't get too enthusiastic. I think that's a good thing. The sentiment is a bit of worry. We're climbing a wall of worry. So that's how I look at it. We've got the stock market not doing too well this morning. The Dow future is down 0.4% or 132 points. Yes, the problem, as I said the other day, with nominal prices being so high, a 2 or 3% move is really scary for the markets. And the other thing I said yesterday with Lynette, when I was talking with Lynette in my interview, was that insiders, people like CEOs and directors of major corporations, they've divested about $24 billion worth from the stock market in the first few months of this year. So we need to keep that in mind as well. So we've got the NASDAQ 100 down 1% or 130 points. The S&P 500 is down 0.5% or 21 points. What about the currencies? Sterling is pretty steady, unchanged at 141.94. The euro's pretty firm, up 0.1 at 122.35. The dollar's up 0.1% versus the yen at 109.03. And the dollar is up slightly versus the yuan at 642.96. Commodities are getting hit here, the general commodities. We are seeing WTI crude down 1.25% at 64.70, and high-grade copper, again, retesting the all-time high from 2011. It's down 1.3%, and it's right at that 466 level. To finish off, let's look at the 10-year yield. We're at 166. It's creeping up a little bit, but still pretty steady, the bond market. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.